Good morning, all traders, investors across the globe, and welcome to the VTC's U.S. Market Call Intelligence Report. This is live 6/4/2024. Today, this is a continuation of a broadcast that was sent out and posted to our YouTube. You can check me on that at 5/5/28/2024, where we clearly stated that the market had serious potential, high probabilities of trading down very, very soon. And consequently, within a short period of time, it did. And all the price profit targets that we used on YM laid out ahead of time were all hit. Every single one of them. So before we get into the actual call, I want to make it clear that right now, we have a very serious opportunity ahead of us if the market trades to YM's near contract month 624 level at 37,987. If we trade through that level on serious institutional volume, you know, the Vanguards, the BlackRocks, everybody, the largest offshore hedge funds, you know, these people that are moving the prices from one level to another, right, manipulating everything, then there's a real opportunity to trade to the downside for who knows how long. And right now, the market is weak. So to check me once again, or check us once again, here is the video that was posted. This is the shot from 107 as a timestamp. Same office, same program. Here's the day, 528 in question, where the larger institutional volume came in just the day before for the sell. And we called that prices traded all the way down to here. Okay, here are some of the levels that we had laid out on the downside right here. As you can see, as the prices traded up, they afforded us levels as price profit targets to the downside as the prices continue to trade down, and so forth and so on. And so this is how, on one particular isolated market, we're laying out or mapping out what we need for the targets to the downside. Every trader knows that's been in the business a long time that the lion's share of money, once again, listen to me very carefully, the lion's share of money is always going to be made at the major market turning points. So let's keep our eye on this level and get into another daily chart that has some of the levels laid out already on YM. Again, upper left-hand corner, YM 624 NCM. Before these prices traded down, take a look at these levels that the opens and closes laid out on the way up for prices to get through and trade to the downside. We'll include one more here, right? In order to consider going short, look at the distance on that short. Incredible. Here, 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 and here. So whether you were trading end of day or trading real time, these are the larger time frame price profit targets to the downside that you would definitely use to get out and lock in a huge profit. So these being laid out and broadcasted out into the future, here we are to the downside. They were all hit, every single one of them, including the low of this bar right here, right? And this came in when? Right, there it is, 530. The low of that bar hit the open of 5.2. People, this is no coincidence. This is how a professional maps it out. This is how a professional deals with it. So right now, these prices are being updated in real time. Current price is MTM are 38,586 to 38,584 now, going down just a tick. And the overall market bias is still weak, strong, possibly short, continued to the downside because every single bar down here that traded down, including the final gap at this point, right after the gap away, with the larger volume sell and all this associated volume here, the bias inside the prices, inside the market is still short. Nothing of any serious larger institutional buying has come in order to stop these prices so far. Only a big up day here. So again, let's go take a look at some of the indicators and see what we've got. Short-term money on the MFI will be first. There it is. We have prices here, lower, higher, indicator mirroring that, not a positive divergence. Not happening yet. Just a few minor upticks at this point. CMF, let's get into that for longer term. And there we have it. A down tick for the session. Again, these indicators are updated in real time as well. Even though they are end of day, they are updated tick by tick as the market moves. So there we have it. An interesting relative comparison, the MAC, the disparity between the signal line and the MACD is real strong. The overall trend, according to the MACD, is very strong. And obviously the SMI, the Stochastics Momentum Index, still has plenty of room to go to the downside. So there you have it. This is a very brief wrap up of the intelligence that surrounds where the market is right now and where we can go in a short period of time. And if this market does take off and move to the downside, right, then this is what we're going to be looking at. We're going to be looking at getting through this level here and looking at prices to the downside that have floors like here, here, here. Look at the interlocking of all these bars. Say a halfway point at this point, this day, right? 1127, here, 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 here. So all these levels are all going to be laid out ahead of time for you to see exactly what we're looking at on the way down. I'll provide two more, and then we have to wrap it up. There. So did you get the overall idea? Note quickly, look at the amount of distance between here and here, here and here, here and here. Look at the dry up of the volume associated with that as compared to here and this. So the path of least resistance right now is still to the downside. This is Jeff Killian for the VTC. This will be posted shortly to the YouTube channel. I would encourage all of you to take a look at this a few times. For more information, serious students of the market can contact us through the website vtctraders.com and go to the contact us inquiries area for institutional and sophisticated retail trader training within our executive mentorship programs. Once again, the key to longevity in trading is risk management. You need to understand clearly that you don't have to prove anything to the market. The market has to prove to you that it's worth your monetary and emotional capital. We'll pick it up on the next Fed.